the $1 Million Mortgage Experience podcast. All right, welcome to today's episode. Thank you for watching. Please hit that subscribe button. Also, please share this podcast with people that you know and that you think that will like it. Today's guest is Eric Morgenson. He's the Vice President of Business Development at Angel Oak. For the past 30 years, he's built a successful career in real estate, subprime, and non-QM alternative mortgage solutions. He's one of the top producers of non-QM loans in the country. And I think the first AE that I ever met that was in the non-QM space. Welcome to the show, Eric.
Hi, John. Happy to be here.
Yeah, so glad to have you on. Let's talk about those days when non-QM started. I mean, we're going to skip over like your story of how you got into the industry because I want to go right into non-QM. It was right after it was 2012 or 2013?
2011, maybe.
Okay.
No, yeah, 2012, 2013, yeah.
What made you want to get into non-QM?
You know, I heard, I have a dear childhood friend, a guy named Bob Hutchins, and he used to work at South Star Funding, subprime company out of Atlanta. And I had met Mike Fearman when I had my company, Nationwide Lending, and looking to take some of the business away from New Century and give it over to Mike Fearman's company. And sure enough, the meltdown hit. I got a call from Mike. He said, "Hey, Eric, I'm tapping out." I suggest you get out of the business too. It's going to get ugly. And I kept my doors open until December 2012, kind of bled out. But then I heard Mike was, coming back around that and coming up with a program that satisfied, here you have hard money here you have tight agency guidelines, and that delta in between, nobody was talking to. Mike even tried to get a loan and was having a hard time qualifying. So he thought, here's a great opportunity, very opportunistic mindset, smart guy, Mike, great guy too. And Bob called me up and said, "Hey, Mike is putting together the band. This is what the guidelines are kind of looking like, but we haven't settled on anything." And sure enough, I got a ticket, flew to Atlanta, sat down with Mike for a couple of days. He looked at me and said, "Geez, what do you think? Do we have a business model?" And I was like, "I'm not sure.
Yeah.
Let me go back to California and see, if I can get anybody to bite on it." And that was a late Friday night. I think it's like 7:00 on a Friday. And I was just kind of looking around for marketing this product. And there I find you would just walk away. And I'm thinking, what an amazing database that would be for this product. And thus,
That's how you found me.
John Maddox becomes the number one broker for Angel Oak for our initial first 2.5 years.
Yeah, it was a good run.
You were the Mac Daddy.
We did a lot of after foreclosure loans.
That's right.
Yeah, people that had foreclosure recently, 3-4 years, 2-3 years after.
Imagine having a program for somebody one day out of foreclosure. And we were talking about, how do they even have the money?
Yeah.
How do they have the credit? One day out of foreclosure. Who's nuts enough to do that loan?
Right. Well, I remember, when the crash hit, I remember that we had a product that Chase put out, which one day out of foreclosure in 05, 06. And so when all the foreclosure stuff was happening, I'm like, banks are going to come back around. They were fine with this one day out of foreclosure, in 05, 06. They were kind of drunk on all kinds of weird greed or whatever back then. But I'm like, it'll come back around. And at some point, there will be a product for people to get back into homeownership. And so went through the whole foreclosure crisis. And then it was like, okay, where is it? Where is it at? Where's it at? And then you called. And then I found out about Angel Oak.
That's it. For you originators out there, patience in the mortgage industry will make you bank.
Yep. You got to survive it, right? You got to just survive those hard times.
Well, there's always a loan program out there, always.
Mm-hmm.
Look around, everybody's looking at the shut door. Why don't we have a moment of silence for rate and term refinances?
Yeah.
Let's just bow our heads, moment of silence, because they're gone.
Yeah.
It's a generational gone.
Yeah.
That never before in the history of mortgage banking has a first mortgage interest rate in place been so low.
Yep.
Coupled with this perfect storm. Never in the history of mortgage banking has there been so much residential home equity.
Yep.
Never in the history of America has consumer debt been so high. SBA loans, car loans, credit card debt. You guys, America
Student loans,
is
yeah.
leveraged to the T right now.
Yeah.
This creates a perfect storm for the type of loan programs today.
Yep. Yeah. Well said. So one of the cool things that I remember about you is you came into my office and you were like, Jon, I'm going to help you find these loans. And obviously we had the after foreclosure loans, but then when it's changed over to bank statement loans, that was like, okay, this is the next wave. Bank statements, self-employed, entrepreneurs,
That's it.
business owners. So talk to us about like what drove that idea, and I'm sure there was a need, right? There's obviously the banks wouldn't do the loans.
Well, listen, all the loan officers out there that this is a weird market, right?
Yeah.
Much reason to be extremely optimistic. And here's a paradigm shift. The perfect solution in this unbelievable storm out there with all the debt is literally tapping in to some of your equity. Now, here you have all this equity out there, and you have dilapidated kitchens, you have houses that are in disrepair. So cash out, second, go to Chase, Wells Fargo, credit union, get a HELOC and fix your house up. It's not a bad thing to invest into residential real estate, especially your own home.
Right.
Because unlike a stock portfolio, you can't sleep in your stock portfolio, but you can look around, and if your house is, a little bit, let's say, dated, you can invest in that and reap the benefits of that investment while you're enjoying it yourself. That's what I love about residential real estate.
Yep.
You can enjoy it while it's a great investment. So now, what about those 57 million Americans that identify as self-employed? Now,
Yep.
you've got it's about 18 million that are full-time self-employed and don't have a W-2 wage and have a side gig. But look at all the side gigs out there. I have 3 sons, and they're all about side hustles as well.
Yep.
And bank statement or alt income second mortgages is such an underserved market out there right now that, oh my gosh. And what do self-employed people absolutely fiend for? Access to capital.
Right. They do.
They
need
fiend
it.
for it.
They need it.
Oh my gosh. And look at our rates are lower than an SBA loan.
Yeah.
What?
True.
And, oh, by the way, your mortgage. Let's talk about it. So Jon's mortgage, he gets to write his mortgage interest rate off to whatever tax bracket he's in. So let's say Jon's in a 45% tax bracket. So he gets to write off 45% of whatever interest rate his first home mortgage is in, up to $750,000. That is our tax code today. But Jon being self-employed, what if he does a bank statement, alt income, second, doesn't show any tax returns, just what he's depositing either in his personal or business checking account.
Right.
And he uses that money for his business. Guess what that tax deductibility rate is? 100%. He's using that money for business. That makes it 100% tax deductible. So, boy, does everybody win in this scenario if you want to capture some of that capital that we call it dead equity.
Yeah.
So you got
Can't
all this
access
equity
it.
in your house and you can't get to it. It's dead. Why? You can't qualify for full doc. You don't want to touch that first. And now where are you at? That equity,
Right.
you can just stare at it all day. It's dead. You can't access it.
But Eric, I've got a 2.5% interest rate.
Never touch it. You'd be silly to touch it.
Yeah. I've heard people say, well, what's that doing for you when you're needing cash? You can't access the cash. You have this 2.5, great, but you need to do this. So you're kind of in a conundrum. But yeah, the second mortgage product is just lights out. It's great.
Millions of borrowers out there. And by the way, you loan officers out there, your competition has no idea this stuff even exists.
Yeah. And banks are like a great source for referrals. If you go to a bank, find, someone who's dealing with a lot of entrepreneurs, a lot of business, go to an area that's like more affluent, right? Probably where you live, where I live. Like there's a lot of areas that have banks where a lot of entrepreneurs are. I mean, I live in Encinitas. There's a lot of entrepreneurs in Encinitas. All like up in Laguna or up in Newport. There's a ton of entrepreneurs that live there. So you go to a bank, walk in, talk to one of their loan officers, tell them what your products are. I know I would get referrals from that.
So nothing's taboo on this. We can talk about anything.
Anything.
Okay, let's talk about bank referrals. Jamie Dimon, I think, is one of the smartest guys in any room. Chase will allow their mortgage loan officers to refer out. They want at least 2 referrals, though. So
like
FundLoans, Angel.
LOs.
That's right. FundLoans, Angel. So 2 different, giving that potential referral a choice. Why? Because what if they refer to only one and the guy ends up being a bait and switch, shyster, mortgage originator, and now possible liability on Chase. Okay, so 2 referrals out. Here you have Wells Fargo, you have B of A, you have these other behemoths that said, no, you can't refer out. No, we don't really care about our customer base enough that if we can't do the loan ourselves, we want to they're dead to us kind of thing.
Yeah.
But you're going to find an empathetic mortgage originator in one of these branches that literally is service oriented and doing well. And if they can't help them, why not refer them to somebody where they can get that home equity loan, because they're needing full doc. They don't do the loans that Angel Oak or FundLoans can do.
Exactly. So they're helping the customer, and we're non-depository, same with you. So if you're a mortgage broker and you walk into the bank, you tell them, hey, I'm a mortgage broker. I'm non-depository. I'm not going to take any funds out of your bank. If you refer me a customer, and I can help your customers get that access to that equity that they're, so they don't pay you off. So they don't go find another private bank that's going to want you to pull their money out and take it to the other bank to get them a loan, because that happens, right?
Yep.
So it's a win-win, and that was always my sale to the loan to the private client guy, right, or girl that was at Citi or Chase. Be like, look, it's in your best interest to refer it to me because I can get that loan done for your client. They'll keep their money in your bank. Where if they go to First Republic back in the day, they would pull all their money out of Chase or Citi private client, and they'd put it all into First Republic, because First Republic would make that exception for that entrepreneur, and they'd do it, maybe lower LTV or whatever it was, but they would do the loan, and so that customer would be, fly away from that bank. So there's a great sale pitch to say, hey, I can help solve that problem. I can give you the loan. Also, they're going to keep their money with you.
That's right. We don't ask anybody to park money into any account to actually access any of the equity in their property. We require 6 months reserves on subject property. Yep. The cash out can satisfy the reserves. Check that box off. The psychological aspect of walking into a money center bank and talking to that mortgage professional who's probably on a $60,000 a year package.
Salary.
If they're really hitting it, they're making 90, and saying, hey, listen, the best way to approach these people is a story. Hey, I'm also a mortgage professional, and I'm in the area, and I want you to know about this loan that I was just able to close, and tell them the story about an alternative income second equity program that you've done. Yeah. Or maybe one that you haven't, and tell them a story about, hey, I recently learned about these bank statement seconds, and knowing that you can't do them and I can, I would love to be able to help your clients out. And, and just literally humble yourself. Don't go in guns blazing like, hey, I'm the coolest guy in the room, and you're a sucker working at this bank because I'm doing stuff you can't. No. Nobody.
Humble.
Everybody loves somebody humble. Nobody loves a know-it-all. Yeah. And just go in and say, listen, I don't know what I'm doing, but I do have access to these programs, and I don't think you can do them. And if you ever run upon somebody that really wants one of these, geez, I would just love it if you would give me an opportunity to help your client. Yep. And watch.
Who doesn't love referrals like that?
Okay, now, here's the weird thing about this. The first time you do that, you might not get any referrals. No. Go back a week or two, maybe a month. Hey, Jon, it's Eric again. I talked to you about, here's the last loan that I just funded doing this stuff. And, again, if you have anybody, I'd be really interested in helping your clients. Yep. Okay, then walk away. Then show up the third time. They know you're not a fly-by-night. Here they now recognize you. You're taking the time to go
Bring them
visit them for
something,
a third time. Well, there's RESPA involved, but just being kind to somebody.
Yeah.
Wait, now they're going to know, gosh, for the third time, now, okay, I think we have an established relationship. And, oh yeah, John, by the way, I just had a guy here. Why don't you try calling him? And just
It'll
one
happen.
time. So the effort equals the result.
Yeah.
The result always equals the effort. That is the
You can't
purity.
just walk in and like expect you might get somebody the first time, but the chances are 90%, maybe 99% that you're going to get.
I'm saying you're
time.
going to get goose egg.
Yeah.
I say goose egg. I say the third time you're going to start getting referrals.
Yeah.
Again, the effort
100%.
equals the result. The
Yeah.
result always equals the effort. In the mortgage business, that's the purity of what we do.
Right.
And we're a business full of, I'm going to throw it out there, a lot of lazy people. There's a lot and there is so many lazy people in the mortgage business.
Yeah.
And I'm just amazed at how I know loan officers right now that are thriving in this market, thriving, just they're busy as can be. And then I know a lot of other loan officers that are crying in their soup about, the
Rates are
fact that,
too
oh my
high.
God, how am I going to sell a 7.5% interest rate? What am I going to do? And here's the kicker. If you wouldn't take a 7.5 interest rate, it's going to be really hard for you to sell it.
Yeah. Yeah. You got to believe in it.
You
Well, it's really, you're not selling rate.
no,
It goes
never
back to
sell
what,
rate.
when I got in the
Payment.
business. Yeah. When I got in the business, it was rates were, the best rates were in the 7s or 8s. My rate was 10 and a quarter, 6 points because I was in subprime. That's how I got in the business. And I didn't know better because I just sold like the benefit. Here's your payments now, and here's your payments after you do the loan with us.
How much do you like me now?
I'm going to save you $1,000, but I'm going to pay everything off. And then everyone just was like, yes, where do I sign? I need $1,000 more a month.
See, I love this market because I got my start doing 125s, all cash out to pay off higher interest rate credit card debt.
Yeah.
It was a solution sale. And here's the weird thing about cash out loans, folks. They're more urgent than purchase loans.
They are
Now, how can
urgent,
that
yeah.
be? Your borrower, once they find out about this, they wanted the money before they contacted you. You guys, it's a means to an end.
Yeah.
And, you're not going to get an appraisal that has, they need to fix a sink. I'm going to walk from this purchase because the seller's not willing to concede on stuff. No, none of that takes place on cash out loans
Cash
at all.
outs are beautiful.
Folks, it's time to get rich on the niche before anybody pays attention.
Yeah. I love that. So let's talk about, referrals are the best type of leads, but you also can buy leads. I know you've spent some money on some leads. Talk about that.
Yeah, spent millions of dollars on leads. I used to be a part of Nationwide Lending, and all I did was convert internet leads into funded loans, and they were all cash out. That was my lane.
That was your
FHA,
niche.
cash out, my niche, and drove a truck through it. When 125s went away, not a big deal. We did FHA cash out. Yeah. So literally, people want access to capital.
Yeah.
Don't ever underestimate the obsession of somebody wanting at all of this equity in their property that, guess what? They woke up one day and it was like a fairy dropped it off. And now old Jed's a millionaire because his house over the last 4 years just appreciated $400,000.
Out of nowhere. How did that happen?
And now they're looking at that new car or jet ski or vacation and guess what? That equity's dead.
Yeah.
It's dead to them. I'm not going to touch my
locked up.
first mortgage. It's dead. Educate them that they can get some of that equity either on a HELOC or a closed-end second, and there's never a prepayment penalty at all. Even if they cash out on an investment property, there's no prepay.
Yeah.
What's the downside?
There's no downside. So what do you think of leads, like buying leads, internet leads?
I am all for internet leads. I really am.
Yeah.
With a lead provider that converts. And how do you know you're going to convert and make money? To spend $3,000 on a lead, would you ever spend $3,000 on a lead, John?
Me personally, no.
Okay, I would. I'd spend $5,000 on a lead. If I were making $10,000 in revenue on that loan, I would all day long spend $5,000 on a lead where I'm making $10,000.
Of course,
and then
it's
I would
arbitrage,
drive
right? Yeah.
a truck through that.
Yeah.
So it depends. Now, leads, listen, it's dynamic. Your best lead provider 2 years ago probably might not be your best lead provider today.
Yep.
I was a big, and still am a big fan of Doug Lebda and Lending Tree, Bruce Cook, those guys. There is, guess what? You offering these type of loans, they want lenders on the network. They really kind of frown on brokers. But boy, if you got a program that nobody else has, they will welcome you onto that.
Nice.
Now, guess what? It's an underserved market out there. I can't emphasize the fact, underserved, meaning you want to be the first to get to them? Get the word out. I know you and I both have customized marketing flyers to get out there. Social media, just doing a post and say, did you know that you can access the equity in your property without touching your first mortgage rate and not show any taxes? Did you know?
Yeah.
Getting it out there.
Yeah.
Now let's talk about buying leads. Yes. And every time you market, it's a test. It is to see how well it did. And you need to track your lead sources and your revenue and have metrics so you know what lead provider you're making the most money on and which one you might be taking a bath on.
Right.
Now, that's lead providers and they're everywhere. And just contact Jon or myself and we'll consult you because our obsession is literally marketing to the underserved borrower out there. I love marketing the mortgage programs.
That's one thing I loved about you as an AE and as a business development person is you were always trying to help the loan officer figure out how to get more loans. And you were, I think you even were like, I think you'll send the loans to me at Angel Oak, but you're like, I'm going to help you no matter what, Jon, because I think you're a good guy and I want to give you these ideas. And so you would just throw out these ideas on how to get loans. And I was always like, you'd call me on your drives. Sometimes you'd be like, Jon, I got this idea. This is how you get more loans. And I was like, and I would go try it and we'd go get loans and you got most of them probably,
That's how it works.
That's how it works.
Literally coming up with ways of marketing and getting borrowers to make your phones ring off the hook for a loan product that they're so motivated for.
Yep.
That's not work. That's fun stuff.
That's fun stuff. Yeah. And the rate and term refi game is so boring. It's lucrative, but it's so boring. When you're doing cash out and they're talking about, my kids are going to college and then you can, engage with them, you can build rapport, or I'm building the pool because my kids are, they want to swim at home. Like there's just like a spark in their eyes and spark in their like voice that that this person, is doing something cool and you're a part of it.
Or they're opening another franchise.
Exactly.
You guys, this
Business
is a cash out for you're buying more inventory. You're hiring more employees.
Right. You're helping that business thrive, right?
Oh my
By helping
gosh,
them get cash.
And that's it. It literally, these borrowers don't have a lot of fear.
Yep.
See, entrepreneurs like John Maddox here, literally the difference between Jon and regular folks is not much other than Jon doesn't have as much fear in between his ears as normal folks that are W-2. Jon's willing to take a risk. And so are these entrepreneurial borrowers looking at, $500,000 in equity in their property and it's dead to them. And now you can make it alive. Right. Oh my gosh. Watch.
Yeah.
Now, referral partners, banks, great. But
what else?
CPA.
CPAs, yeah.
CPA. Now think about
that.
My CPA, your CPA, everybody's CPA, even Ryan in the room, his CPA. Listen, your CPA knows where all your financial bodies are buried. Yeah. It is a high trust relationship between you and your accountant because you trust them. And what is money in our society? Money in our society is security. So there's a high trust relationship.
Fun coupons.
That's right. So now your accountant tells you, Jon, well, you really want to buy that house and I'm writing everything off doing my job. You're taking advantage of the 75,000 page tax code in America.
Right.
You really need to go call this broker because they can make that happen. They can actually help you buy that house and start building equity and they can make it happen. Now, if my accountant tells me to go call somebody in the financial services business, I'm not going to get them on the phone and start grinding them on, okay, John, so what's your rate? No, all I'm interested in is, hey,
Can you get me approved?
John, my accountant said that you could possibly help me.
Yeah.
Now, that is the
gold.
best. I think that is the best referral you could possibly have.
And when you asked me would I spend $3,000 on a lead, I was thinking, well, I'd rather spend $3,000 of like my money in developing and business developing into a CPA referral source where you have like multiple referrals constantly, right? And you're not paying the CPA, obviously you can't, but like you can create, friendships with CPAs and then trust to where they're going to always, refer you. You could throw a party where you invite CPAs at your office, right? Like you can have networking parties and
CPAs hang out with CPAs.
Yeah.
And that's how it works. And they
big
have to
firms,
meet,
right.
They meet every quarter at a restaurant. Just Google, whatever county you live in as loan originators, whatever county you live in, just Google that county, a society of certified public accountants. Just Google it and watch all of these clubs. And they have to attend one meeting per quarter for their to maintain their CPA license in America, right?
Okay.
You NMLS loan officers, you have your 8 hours every year to maintain your NMLS license.
Right.
These guys have to do 2 days of ongoing education plus a quarterly meeting. Why not drop in to a quarterly meeting? They meet once a quarter at Trevor's by the Tracks in San Juan Capistrano. I'm in South Orange County. And all these CPAs drop in and listen to somebody lecture them about, tax code. And guess what? It's in a restaurant. It's in a bar. Maybe buy a round or two. Right. And if you keep showing up at these meetings, they're going to recognize that you're somebody that isn't a fly-by-night.
Right.
That now you're meeting them not once, not twice, but 3 times. Can you imagine having a group of maybe 3, 4, maybe 5 good CPAs referring their clients to you for their luxury real estate purchases? Because guess what? They're self-employed and they write off too much on their taxes, but yet want to turn around and buy a $4 million house.
Right.
And you're the guy that they're referring to. And all you loan officers out there, you're paid on basis points. Yep. So why not jump into the pool of jumbo loans in your area by networking with accountants?
I love that. That is well said, Eric. Thank you. That was really good. So that's where they hang out. And why not be where they are, right? Because that's where you get the business. I mean,
well, here's why. Because you're not that 10% of the loan officers out there that are gritty, that are thriving right now.
You're just sitting waiting for a phone call in
your
office.
You're the 90%ers out there going, God, that's an interesting idea, and then never take action.
Never do it.
That's it. That's what.
Come on, take action, guys.
I want to shake some people going, don't you see?
It's there. It's there. You got to go get it.
You got to want
Effort equals.
The effort always equals the result. The result always equals the effort.
Yep.
And at first, you're not getting any referrals. Guess what? Never, ever give up. No. Never give up. Keep
doing it. Do it over and over and over. Yeah. Because it will turn into success. You just got to practice. You got to keep doing it. Like anything in life, right?
I think so.
Yeah.
It's a common theme. Those that are really successful were at the verge of bankruptcy or at the verge of giving up or just right there at the edge, and they stuck to it, and then bam.
Bam. Didn't Walt Disney file bankruptcy a couple times? I remember hearing some story like that, but to your point, there's a lot of successful people that have been bankrupt.
Most of them.
Yeah, most of them. And they don't look at it as like a failure. They look at it as another step towards success, right? Like, and they learn from it. So what other lead or referral really great ideas you got? I'm thinking entrepreneurs. Where do you find entrepreneurs? I think like entrepreneur conventions, entrepreneur gatherings. What else?
Great idea. Well, listen, we're in California, but this works nationally. If you're really gritty, what you do is we have customized marketing flyers. You get your car washed, tape it up on the bulletin board of your local car wash dealer. Walk into realtor offices, take a flyer of alternative income bank statements, or just the loans that we do that they can't get done at anywhere else, and put it on the refrigerator right there on the break room at a realtor's office. Just walk around with a roll of Scotch tape in your car and flyers, and every time you drive by a real estate office, just go put it on the refrigerator. Guess what? Those realtors will start calling you. And a lot of times for loans for themselves.
Right.
Because think about a realtor is self-employed. Their broker of records, giving them their deposits into their personal checking account. They're writing everything off.
Yep.
And they stumble upon good home purchases. So the highest demographic at Angel Oak for bank statement loans purchases are that of real estate agents.
Wow. Yeah, I didn't know that.
Yeah, well, they're the ones that are exposed to these programs most.
Yeah, and they you're right. They get the deposits, and they have kind of up and down income, and their tax returns are super light because they write it all off. There's a ton of write-offs in the real estate industry. You have to buy those knickknacks. You have to do your coffee meetings, so you can write it all off. Your car.
That's it. So any Subway that you go to, guess what? Those are franchises. Any fast food restaurant you might go, guess what? Some franchisee owns that. They're self-employed.
Yep.
They might be interested in buying a luxury real estate, and they don't know that they can qualify.
Yep.
Your dry cleaner, you're going to walk out your front door, you're going to trip over an entrepreneur.
You just have to be looking for it. It's like that red car thing. Have you heard about that?
The Scotoma.
Yes.
Yep.
Talk about that.
So let's say you're in the market to buy a car, and it's going to be a certain car. Let's just say, I don't know, a Tesla. And you're thinking about buying a Tesla. Now that you're thinking about it, anytime a Tesla goes by, you recognize it.
You see it.
Whereas before you didn't, because you weren't thinking about it, but it's called the Scotoma. It's taking the blinders off, and now you see everything. If you're interested in thriving in this market, you really want to capture this underserved market, and that is the self-employed American out there.
I would challenge any broker to try this, to get out when they get up in the morning, they get out of their house, they walk out their front door, they get in their car, turn on the eyeballs of where are the entrepreneurs. Like you said, the franchisees, the dry cleaners, the people that do pool servicing, the plumbers,
Chamber of Commerce, just meetings of entrepreneurs.
There's just
everywhere.
Small mom and pop shops everywhere, like the little retail centers. Like you said, take a little flyer, put them up, tape, pen, whatever. They're all over the place. Entrepreneurs work out at the gym. You can put stuff at the gym.
Yeah,
they're everywhere.
And call BS on us if you really put forth the effort over the next, let's say, 90 to 120 days, getting the word out to self-employed people that they can either access that debt equity in their property, or they can buy luxury real estate that they didn't know. Call us on it.
Yep. Talk about DSCR.
DSCR, easiest loan in the business. We just want to see the property debt service cover. Oh, wait a minute. It keeps getting better. We don't care if it's negative. So let's say the payment to FundLoans or Angel Oak is $7,000 a month on that investment property, but it only rents out for $4,500 a month. Now what?
Yeah. It's upside down.
Upside down. And what knucklehead would buy a investment property where he's having to stroke a check for
every month.
$3,500 every month? Who would do such a thing?
Some very optimistic person.
Well,
very stupid.
Here in the state of crazy California, we are appreciating in some areas up to 27% a year. Now, I'm not saying that we're going to at that clip, but they're buying it for the future appreciation value. Okay. Oh, and it's wonderful if it's 1091 exchanges and as well. So, okay. So we don't care if it doesn't debt service cover, but if it does. Is that called
a no ratio?
It's a no ratio. Yep. We'll do it. You need a 700 FICO. You need to have good credit. And it's got to be a 75% loan to value or less to be able to do that. But it's available.
No income.
No income whatsoever. Unlimited amount of finance properties. There's no debt to income ratio. What does that mean? They could have 4 Porsche payments at $4,000 a piece, maybe 120,000 in credit card debt, co-sign for all their kids' loans. Their debt to income ratio is out of control, and will still do that.
But somehow they're
investment
making
purchase.
money in crypto or something, right? But they just can't prove it.
Well, listen, investment property out there is, look at BlackRock and all of these other companies out there they're at a clip of 800 to 3,000 residential real estate purchases a month. And what do they know that possibly we all don't know? They know that rents are going to continue to go up. Residential real estate is going to continue to go up. Why? The fundamentals. Talk to Barry Abib. I'm telling you, he's the closest thing to a crystal ball in the mortgage industry. He is on mark with his predictions. It's supply and demand. There's more people needing to buy a house than there are houses.
Right.
So just let's put that together.
Mm-hmm.
So this is what BlackRock knows. And again, do you think they're interest rate conscious? No. Guess what the interest rate is if I own an investment real estate? Guess what I get to do with my interest rate? It's 100% tax deductible. It's not tax deductible like my primary or secondary home, where it's deductible to whatever my tax bracket is. It's 100% tax deductible.
Yep.
Oh,
It's big.
it is. Knowing our tax code as a loan originator, guys, it'll help you possibly tip a borrower that might not know. Now, you don't want to get tangled up into the weeds of the U.S. tax code.
Right.
You always want to have them consult their accountant, but their accountant is going to back up exactly what I'm saying. Investment property, interest rate, 100% tax deductible.
Huge. So let's find or share with us, how do you find borrowers, buyers that could benefit with the DSCR?
I think the best referral source on them, again, CPAs and realtors.
Mm-hmm.
A lot of times these guys that have a big appetite and buying a bunch of it, they're a realtor themselves. So letting them know who is got the most aggressive debt service ratio coverage loan out there, who's got the most competitive rates, and drive a truck through it.
So good. There are a lot of people just crushing the DSCR game.
Yes.
They're just crushing it because people are buying up these investment properties.
And they're not rate conscious. They don't care.
No.
When one comes on the market, they pounce on it. Now, unlike hard money, I'm sorry, not hard money, private money, we should call it.
Right.
A lender like Angel Oak, we want to see that property in at least average condition.
Yeah.
A hard money lender, geez, the property can be in half burnt to the ground, and they're just literally doing the loan. They don't care about credit. They don't really care about anything but their collateral position or their position on it. And at a 60% LTV, they're looking at how can we get hurt?
Yep. So that's another way to find them. Private money lenders.
Well, you might be the enemy to a private money lender because they're wanting to charge their 2 points, and it's a higher interest rate than the DSCR loan, but the unsophisticated investment property buyer might not know that.
Yeah.
See, we don't need income.
Private money likes to churn their money.
Oh, the reallocation of assets.
Yes,
That's right.
yes.
So it's usually a 1 to 2 year balloon. And then now if the borrower is slow on making payments, they're really motivated to, get that borrower off their books.
Right.
Or possibly hard money lenders now know that the borrower can possibly cash flow, and maybe these programs might be an option for them.
Yep.
I've not found, I thought initially hard money lenders were going to be a great referral source.
Yeah.
So I spent a lot of time on it, and it didn't bear a lot of fruit for me.
Okay. Yeah, because they kind of want to keep their clients close,
They do.
right? Yeah.
Can't blame
Want
them.
to keep them churning.
Listen, everything is public of what we're doing. Me and John are frenemies. We're friendly competitors. Everything is public. Nope, it's not rocket science. We're all doing the same thing.
Yeah.
But for you loan officers out there, the one thing you're going to keep close to your vest is your marketing tactics that are really working well.
Right.
And you're not going to want to go share those with your competitors. And I understand that.
Yeah. No, I mean, I remember someone giving away all their secrets when I was a loan officer. And I was like, these are amazing ideas. It was my manager, right? And I came and he was putting away some stuff in his car, and I came up and asked him, like, why are you telling all these secrets to everyone else when, you could just keep them for yourself? He's like, John, 9 out of 10 people aren't going to do it.
That's it.
And he said, and if they do, I'm still going to beat them because I'm going to outwork them. And I also get an override on them. So great. It's going to help the company, help the business. So my thought was always the same. So then I wow, that's an amazing, way to look at that. So then I started giving away all my ideas to people, and then, one or two would start to do them, and they worked for me, and it worked out great. But it's back to the effort. A lot of people don't want to put the effort in.
Well, I might add a fourth. Folks, why not? Because there is so much business to be had out there that one person can't possibly get to it all. And oh my gosh, there's an abundance of loans out there waiting for all of us.
Yeah.
I'll share whatever's working with anybody in hopes that, you take that loan to Angel Oak if it fits. But if it doesn't fit, or if I, at that day, am not the lowest rate, I'm not going to be upset that I gave you a marketing play that you're making money on.
Right.
I want to be a trusted source for the broker community out there. Absolutely. Like you do, John. Yep. So, guys, there is so much business to be had out there.
Yeah, so much business. Let's talk about, technology in the space. And it's starting to get better, right? What do you think of AI, and what do you think of how that's going to affect the mortgage business? Should loan officers be scared?
No. Listen, AI right now is like the internet back in 1991. Everybody's like, well, the internet's pretty cool, but nobody's really kind of figuring out how to make any money on it, except for pornography people. Right. So AI right now, you guys, we're all using it. You got Siri, you got Alexa, you've got Google Maps in your car. Guess what? That's all AI.
Right.
So why not use AI? We're using it right now to calculate bank statement income. Mm-hmm. Optical character recognition has come a long way. We scan it now. Then an underwriter goes through the findings, and we're same day giving you a full income and credit underwrite on a bank statement loan same day. Now that's pretty cool to have a loan underwritten in a day. Now we don't have title, we don't have the appraisal yet, so it's not a full underwrite, but it's income and credit right up front. So now your client knows how much of a house they can possibly buy or how much cash out they can get. That's a cool thing.
That's cool.
So don't be afraid of it whatsoever.
Do you think, though, it'll start, coming for the agency stuff, like the AI? They'll start taking over some of those jobs.
I do.
Yeah.
I do believe that it's going to make a lot of things obsolete initially, and then it's going to get dramatic.
Yeah.
But right now we're in the early stages before we're going to see adoption.
Yeah. What other technologies have you seen, help the business?
You have, the phenomenon of VRBO cutting into all those hotels. Think about it. If there's 4 of us and we're all going to go to Palm Springs and all stay at the Marriott, we're all going to get our hotel rooms, and instead we just consolidate and rent a condo together. Now we're all together. It's cheaper and it's a lot better. We have a kitchen. No, that phenomenon is unbelievable. AirDNA.
Talk about that.
Is a website that I can put in any investment property and find out what even if it's a new property, it pulls the records on the short-term rental income. Mm-hmm. So we allow short-term rental. We do condotels. So we're going to want to know how it's cash flowing, and that AirDNA gives us that right there, instantaneous.
Is that airdna.com?
Uh-huh.
Yeah. So you can go on there. Both of us can use that in our underwriting. So it's like a projection, or at least kind of shows you what you would make on an Airbnb property, right?
Yep. And on a long-term rental, you're about to put in one. Now, the better the property cash flows, the less risk.
Yep.
So if John buys an investment property, the payment to Angel Oak is $3,000 a month, but it rents for, let's say, $3,200 a month. He's $200 a month positive cash flow. That's less risk than if it's negative cash flow. So you're going to get a better interest rate.
Yep.
So with that said, we're going to want to know, what is it cash flowing at before that appraisal comes in, so you can literally send that LE disclosure out and make sure it's as close as possible, because you never really know until that appraisal comes in and you see the 1007, what the appraiser marks down as fair market rents. That's what we go off of. So I used to go to Rentometer, and
I remember that website, yeah.
When a Rentometer, it's free. You put in the address, pops up. Now, depending on what link you Google Rentometer on, sometimes it wants you to pay for the subscription, wants you to sign up for a free month, and sometimes it doesn't even give you that. So it's all over the board. Yeah, it's kind of strange, but no, yeah. I used Rentometer this week already. Yeah,
I tried it, and they tried to get me to put money in, and I'm like, let me go somewhere else. But yeah, it's great.
Zestimates, Redfin also gives you rental. But again, long-term rental versus short-term rental, we both do both on DSCR loans.
Yep, that's good. Let's talk about success, because you've been successful. I've been successful. What are some ways that people can apply principles to be successful?
Right. So I think probably the word of 2024 is going to be the word of the year.
Yep.
Probably manifestation.
Ooh, I like that word.
Manifestation. Literally. In the Bible, it says to pray as if the prayer was already answered. No, that takes belief. That's going to take a lot of faith to pray for something that you don't physically touch or see, or you don't have it yet, but believing as if it already happened.
Yep.
So manifestation is literally see your business, not how you want it, but actually see yourself being successful. And if you focus on that, how do you manifest it? Well, because you're focused on it, you're telling the universe that, hey, this is what I'm going to have. And now your actions start directing you exactly towards that. Mm-hmm. You can't just sit down and manifest, I'm going to be, the president of the United States, and then go back to, watching Fred Flintstone eating chips on the couch, taking bong hits all day.
That's not how manifestation works. No.
But just believe that you're going to be doing a bunch of loans, making a bunch of money, and write it down.
Yeah.
And then if you share a goal with somebody publicly, I think you're 80 times more likely to achieve that, because what do we fear more than death is public humility.
Yeah.
And we all want to be people of our word. So share with somebody, share with your good friends, share with everybody where you're going to be.
Yep.
And believe it.
You have to believe it.
And then watch.
Yeah. You have to believe it, then you have to walk. You have to actually get up and start taking steps. You also have to plan, right?
Well, it's like gravity. If you have that goal up there, you're going to have a gravitational pull to making that a reality.
Yep.
So watch your actions start. Listen, you didn't want to make that call because, how are they going to think about me or whatnot? You start getting rid of the fears in between your ears about how to advance your career, because you're focused on that goal, no longer on these fears start going away, and you will make that call. Or a call to somebody that's intimidating to you. Guess what? You really have that goal and you believe you're going to get there. You no longer have fear of making these calls.
Yep.
You no longer have fear of walking into a Wells Fargo, walking up to the loan officer and saying, hey, my name's Eric Morgenson. I'm just like you like me. We are both mortgage professionals. I want to share with you a loan I just got funded. Can you believe this? And I know that you don't have access to these programs, and I would love to be able to help you with your clients, and I'll take care of them.
Yep. So getting rid of fear takes practice, right? So if you're afraid of heights and you never ever go up to a diving board that's like a high dive, you'll never overcome that fear. But the more you do that, like you do it, say you do it 100 times, your fear of heights starts going way down. But if you avoid it, you'll never overcome the fear. So similar to that, if you're going to go practice, you have to go practice meeting people, cold approach, learn how to do that, practice. You're going to stumble, you're going to fumble your words a little bit. But as soon as you do it, say the 10th time, the 20th time, you start to get good at it. And your heart rate starts slowing down.
A lot of wisdom in that.
Right? But it just takes, you got to do it. You can't just try it once and be like, oh shit, it's not for me. I can't do that because it's too scary. You got to be able to go and fumble and do it and then keep going and do it again. And
you're going to screw up.
Yeah, you're going to screw up.
You're going to mess it up.
And it's not the outcome, it's the action, right?
You are going to fail. But guess what? And you're going to learn from it. You're going to dust yourself off a little bit and get right back at it and watch.
Yep. It's not the outcome, it's the action. Taking those actions eventually will lead to an outcome. But the most important thing is taking those actions and learning from them. But then also that will lead to the outcome that you want.
Well, how do you even get to getting off the couch? I think it comes that the 10% of you guys out there have immense desire. You want financial freedom. You want to be able to travel. You want better for your family. You have an immense desire. The other 90%, you have desire, but it's not white hot burning.
Yeah.
And Napoleon Hill said it best in Think and Grow Rich. You have to have literally kind of an obsession.
Yeah.
Now, that might be uncomfortable for a lot of people, and making a lot of money is not your lane.
Yeah.
And that's okay. That's more than okay. That's just, that's what you choose.
Yeah. I heard something recently where they were saying depression or, if you're sad or you're feeling down about yourself, there's a reason and to really embrace that, because it's a motivator to say you need to get up. Like, same reason, like when you're feeling freezing cold, you just naturally will get up and put on a jacket, or you'll try to warm yourself up, right? The same, it's like a gift. Like if you are feeling like shit, you're feeling down, take that and go, I need to change something about myself, or I need to change something about my situation, and use that as the fuel to get you. Maybe it's like, I'm not working out, I'm not doing this, my life is just going a downward spiral, right? And you're just like in the dumps. Take that icky feeling and go, this is giving me this feeling because I need to change something in my life.
Well, Anthony Robbins, he wrote a book, Awake the Giant Within, I read years ago, and he made a career out of, hey, to be successful, you got to have the energy.
Yeah.
And if your diet stinks, if you don't work out, if you're not getting enough sleep, guys, it's hard to have desire.
Right.
It's hard to have the energy to do it. Just literally, look at that study I heard on Rogan, had the carnivore diet guy on, and was talking about mental health facilities when they go in and completely change the diet from processed food crap to healthy food.
Yep.
Guess what happens to 27% of the patients? No longer have symptoms, and guess what? They no longer are having mental health issues.
Right.
It's remarkable.
Yeah.
Crap in, and you're going to feel like crap, and you're going to think like crap.
Yep.
And you want to rid yourself of being depressed? Work out.
Yeah.
I've never
natural
ever,
dopamine hits you.
That's right.
Yeah.
I've never ever met anybody that suffered from depression that went to the gym regularly, that was working out, that had a good diet, that got rest, that was generous. Never ever. Now, guess what pharma wants? And I think pharma's evil.
Yeah.
Pharma wants to treat a symptom of being depressed with what?
A pill.
A pill.
Yep.
A very expensive pill.
Right. One that you need every day.
And they don't talk to you about cleaning up your diet, exercising, getting rest. Nope, no word about that. It is just take this pill.
Yep. I know you like music. Music helps change the mood. Talk to us about music.
You guys, the louder the music in the car, my dad taught me this, the faster you're going to, and more dangerous you're going to drive. So I'm just cracking
music
up.
Definitely can change things in this situation.
Oh my gosh, it does. So the loud, Zepp.
Yeah.
I'm telling you what, I tend to drive, I think it's John Bottom's drumming that tends to make me speed a little bit more, but I work with music in the background.
Yeah.
Now, my late wife couldn't concentrate with music, and it's just fascinating how we're all so different.
Yeah.
But whatever literally can keep you literally calm throughout the day, motivated, and just rid your mind of all the lies, that is fear. Fear is a lie.
Yep.
And fear, that lie, is keeping a lot of folks, mortgage originators, from making a lot of money.
Absolutely.
And that drives me crazy.
Yeah. And granted, the mortgage business is full of ups and downs, and that's kind of sucky, right? You're crushing it one day, and then the rates go up, and you're like, I'm bankrupt,
But therein lies the opportunity.
Yeah, and you got to look at it differently,
market
right?
Transitions like this, there's a lot of wealth created right now.
Right.
Look at all the people that became multimillionaires during the Depression in the 20s and 30s.
Yeah.
Multimillionaires. They saw not the door that closed, they saw the window that opened.
Right.
You originators out there, rate and term refinances. Mwah, bye-bye.
Bye. Don't hold on to it.
Cash out. Bring it on.
Yep.
You can get rich on the niche. You can. It's waiting for you.
Yeah, it's there. Yeah. Any other ideas on how to get those loans, those cash out loans? I got one. Pool contractors.
Any contractors.
Yeah.
Oh, by the way, contractors are printing money right now.
They are.
Try in Laguna Beach, try to get your kitchen remodeled. It's like a 2.5 year wait.
Yeah.
Everybody is slammed busy.
Right.
What a great opportunity right there. Contractors, they're talking to people that might want to not only remodel this part of the house, but put in an ADU. They're going to need the money. Oh, they can't access their equity. Now with you, they can.
Yep. Also, you can go out on the golf course and meet some new people, right? I know you like to golf, right?
Oh, that's kind of a bougie clientele there. So,
but we're talking about jumbo
golfing
loans
with Biff and jumbo loan guy
loans.
right here. No kidding.
How do you find jumbo loans? Golf courses?
Yeah, Bighorn out in the desert, no doubt, is full of fund loan, borrowers. You got to love that.
Yeah.
John, what's the biggest loan amount? You popped one over 8 million?
10.
10?
Yeah.
Mm-hmm. Folks, you're paid on basis points. Again, a $10 million loan. Ching, ching.
Yeah. That's a lot of money. Changes your world.
It does.
And why not? It's the same amount of work. It's actually easier. It's easier to do a $10 million loan than it is to do a $100,000 loan.
Okay, so let's talk about...
If you have the product, right? Or you have and it's a good loan. It's not like some 80 LTV, 10 million. You can't do that. But, the rich people have accountants. They have assistants. They have people that organize their life. So you don't really, everything just comes over in a nice packaged email to you. And then you send it to your underwriter. You obviously go through it. You send it to your underwriter. Whereas, I remember doing super small loans, like back in the day with the subprime, and I remember how hard it was to get documents from people with small loans. And I'm just generalizing here, right? Not every one of them are going to be like this, but it was just such a shift and a change of mindset when I started doing the big loans, and they had, oh, here's my assistant, they'll get it all for you, and then within one day you had everything all organized, done. Versus I got to go to the attic and grab that, my social security card. Oh my God, I don't even know where it is. And, they're great people, but they have to find it, right? They don't have an assistant. They don't have the luxury of having everything organized by someone else that deals with that, right?
Well, with the exception of doctors, multimillionaires are very organized.
Yeah.
You got to be to get that kind of wealth. You're right. There's a class of borrowers out there that can't even find a copy of their tax returns. So,
right.
Yeah, but it's different. But I want to talk directly to the originators out there about originating a loan for a multi-millionaire. Now, that millionaire, it can be very intimidating. Guess what? They have he or she has an alpha mentality.
Yep.
You don't know what you're talking about. They're going to rake you over the coals. They're very demanding clientele.
Yeah.
Extremely demanding.
They're used to getting what they want.
That's right. And guess what? Here's how you rid being intimidated by them. And again, it's a lie, that fear, because you're nervous. They want the loan more than you need the loan.
Yep.
Again, they need the loan more than you want the loan. They want the loan more than you need the loan.
Yep.
That's how it works. You're going to facilitate it for them. So they've got to line up for you. And originating loans, you guys, I've originated a lot of loans in my life.
Yep.
Always works out best that in the initial conversation, I say, hey, listen, I'm not sure I have a program for you, or you're even going to want the loan that I can offer. What I'd like to do is ask you some questions so we can find out if this is going to be a fit for you and you're a fit for us.
Right.
So with that said, do you mind if I go into asking you some questions and let's determine
Explore this,
right now. Now, that's the last thing a salesperson would say. Salesperson is features and benefits, features and benefits. No, say, listen, I don't even know if I can do a loan for you.
Right.
I don't even know if you're going to want the loan I can do for you. Let's just find out. Now, the guard is down.
Yes.
Now you say, okay, all right, so here's how it works. With these, I'm going to ask you these questions, and if it does, I'm going to need you to get me all this information. Now, I can't have half of it and give you an answer. I'm going to need all of it in its entirety. So we can't take shortcuts in this process.
Right.
And that way, it will be very smooth. And there's going to be a time throughout this loan process that I'm going to call you up, and I'm going to need additional information. Why? Conditions beget conditions sometimes. So I need you to be amenable when that time comes. Fair enough? And you're asking for them to say, okay. When they say okay right now, boom.
Yep.
You go guns blazing, fully bake a 1003, and your loans go smoothly with non-QM companies. Half bake a 1003, and there's going to be a lot of back and forth.
Yep.
We don't, you didn't fill this out. We're missing this. No, literally. Get the entire 1003 filled out and things go smooth.
Talk about the importance of the 1003. Because to your point, half-baked, you're going to have all kinds of problems.
You will.
But why do you even get a half-baked 1003 these days? Lazy? What else?
Well, I'm going to look in the mirror at Eric Morgenson, and when I was originating back in the day, I thought less was more. I thought, oh my gosh, I'm going to lose this borrower if I keep asking all these questions, and they're going to become impatient because, borrowers have the attention of a lightning bolt out there. And
right.
I want to be like the easiest guy to work with and be their friend and really have a friendly relationship and not bug them too much. And that always bit me in the butt.
Yeah, backfires.
I'm not going to be their friend. I'm going to be professional. And I'm a matter of fact, and I'm literally financial services. This is what I need to get this done, and things go smoothly.
Yep.
If I set the table right up front.
Yep. And I think a lot of brokers, loan officers, they don't use the 1003 like we did back in the day to build the rapport. It's like a link. It's just like, here, fill this out, complete it, send it back to me. You get a notification because of technology. How important is it to sit through that process in a 1003 all the way through for whatever it takes, 10, 15, 20 minutes, and talking to the borrower up front?
A 1003 is an amazing document. We're the only industry that I know of that, boy, does the curtain get unveiled on a 1003, especially if you've ran credit. You get to see their spending habits. You get to see the age of their children. You get to see, if it's really baked, where they went to college, how long they've lived at their last house, the house previous to that last house, exactly what they have in savings, the fact that they are a very sophisticated person, but in W-2 and have all this money, but they don't have a 401k and their company offers it. These little nuances is you really get to know the entire DNA of that borrower. Meanwhile, what do they know about you? Nothing. But you have all this information on them.
Yep.
Yeah. No, it's fascinating. And that see, this isn't work to me, making a 1003, just because I'm curious about
you gotta
people.
Be curious,
and I love people and
in sales, right?
Really curious about it, especially when they're self-employed, folks. Now, you get to see how long they've been self-employed. And really, that 1003 leads up to their habits. And you can see why they're so successful. And it's just fascinating.
Well, you create a bond during that time because you're naturally, when someone sits and asks you questions about yourself, you tend to like that person more. You know what I mean? Like,
it's their favorite topic.
It's their favorite to talk about themselves, especially when you dig into where they went to college and they have all these memories of, whatever it was that they did in college that was exciting. And then you start talking about their kids because you're going through the dependents. They start talking about their kids. So this process is a lost art, I think. I think most loan officers, they don't realize the value in the 1003, in talking. It's even more valuable if you're doing it in person, which you can't always do, but over the phone or on Zoom, the value of that is like astronomical, because also if you're doing 30 minutes of this time, they don't want to go do 30 minutes again with someone else.
Excellent point. That is it.
Right?
That is it. And for you originators out there that see filling out the 1003 as a chore, this might not be the business for you.
Right. And that, I think, is where you get the client to love you and want to refer business to you. You start there. Obviously, you have to deliver, right? You have to have the product that you can give them that will get their loan to the finish line. But you got to start there, and that's what creates the relationship. That's what takes them off the street too, so they don't go shop you.
That's right. And if you're nervous about this 1003 or engaging with them, that means you probably don't know your loan programs. You don't know your guidelines, and you're not. Listen, if you went to high school or college, you studied for tests that you didn't get paid on. And in this business, you just study up on these guidelines, you'll get paid on it, and you'll be confident.
Right.
And you're not going to be able to answer every question. That's for the underwriters.
And you know when to skip. The more you do it, the more you learn, okay, I got to skip this question because it doesn't apply or whatever, right?
That's right, yeah.
Talk about highest and best. I know you have a partner in your business development side.
Bob and Ernie, I've got a lot of.
So you have kind of mastered the art of doing what's the highest and best for Eric Morgenson. I think people tend to get in the weeds and they end up doing stuff that's not the highest and best for them. When did you decide, or how did you learn that, okay, I'm not going to do this other stuff because I'm just not good at it, and that's okay, but I'm going to do this other thing, which I'm really good at. I'm going to focus on that, and then that will help maximize your career. Talk about that.
There's a book by Marcus Buckingham that came out called Now Discover Your Strengths. It's not a Myers-Briggs or a Maslow study. That's more personality. This is how God hardwired you, what your core strengths are as a human being.
Yep.
And while you have so many strengths that I don't possess, Ryan has strengths that you don't possess, and we're all so different. So this book was so influential that Oprah used to have a book club. She would mention a book for 15 minutes on a Thursday. It would be, a New York Times bestseller. She was so enamored by the single book that she had devoted an entire week of her show to a single book.
What's the name of the book again?
Now Discover Your Strengths. So it's called the Strength Finder Movement. So you take a test after the Strength Finder test, and it will nail your top 5 core strengths in order. So my number one strength is belief. If I believe something, boy, I'm very convincing. I am restoration. So if a loan's going off the rails, I love jumping in and trying to fix it, whatever. I am an includer. I'm also an arranger. So I love including people and literally hiring people and putting them into the right role. So cool. These are, and I can't take credit for any of these strengths. That's how God wired me.
Yeah.
So the easiest way to answer your question is whatever you're doing in your daily tasks, and break down how much money you make a month, and take that month, how many hours you're working, and now find out what your hourly income is. And if you're doing a repetitive task that, let's say you make $80 an hour, if you're doing a repetitive task all the time that's easily delegated to somebody at, let's say, $15 an hour, do it. It's a simple mathematic, arithmetic algorithm right there. Don't focus on the little stuff.
Right.
Focus on your big picture stuff, and that's how you will actually build your business.
Yep.
But you got to know how much money you make an hour.
Yep.
On average,
That's a great way to do it. Plus, you'll just be happier.
Yeah.
Not doing stuff you're not good at. No one likes to do stuff that they're not good at. I mean,
you'll procrastinate.
Yeah.
If you're not good at something, you'll procrastinate on it.
Yep. Yeah. So get that. That's something that I think if you do that alone, you're gonna get ahead. Just by doing that alone. Just find someone that can do, hire someone that can do the stuff that you aren't good at. That's gonna, at a lesser dollar per hour. Like, that's great.
And if you're really somebody that has to control everything, it's not going to work out well.
No.
So maybe don't even attempt that, and just, tough it out doing the task that you could have, but you can't let go. We're not here to change anybody, and it'd be hard to change a personality that's very controlling to not be. So
loosen up a little bit. What other things that will help people succeed?
Literally, it is your attitude is everything in this business. And I can pick up on what an originator, what a broker's attitude is the second I walk into their office, second I start talking to them on the phone. Guess what? The successful ones are very curious. They're wanting to know more about these loans. I know somebody is going to be making bank when they ask me, hey, what's working out there? What do you see? What's working?
Yeah.
I know, okay, that is a great question. Or I get off the phone with a broker that is, asking, why can't I make an exception on a loan that he personally wouldn't do that loan with his own money, but wants us to make an exception on it, that just trying to cram a square peg into a round hole. There's a reason for these guidelines, and it's all because of what the secondary market has an appetite for. If they don't have an appetite for it, guess what? I can't make that exception in these guidelines.
Right.
It's just, we don't have an investor for that loan.
Right.
And don't just keep whipping that horse thinking that it's going to run the race when the investors, like I-10 bank statement loans, there's no appetite in the secondary market for
Right.
them. Well, now, some lenders allow them. It's kind of like a unicorn. They allow them, but you'll never get one funded.
Yeah.
Because there's no appetite currently for it.
Yep. You got to know.
It's your attitude as you're approaching these loans. Hey, the loan can't fund this way. The underwriter turned it down. A good lender, and we fail on this often, is, hey, I can't do the loan on this, but let me counter. How about if we lower the loan amount, or if we do this or do that? Now we're talking to figure out a way, if a loan that just getting creative, figuring out how to make the loan work.
Yeah. I like that. Any failures that you've had in your life that led to success?
We don't have enough time. Yes, I fail.
Any favorite ones?
I fail all the time. I've been ripped off by every lead provider that was a shyster known to the mortgage industry from 97 to about 2012. But it didn't stop me from trying new lead sources to see if this is the golden one, if this is the one that has the least amount of cost, the highest rev. It didn't slow me down. Always testing certain marketing.
Yep. Just learning from those little mistakes. Any shout outs to people that have helped you along the way?
Oh, well, I shout out to FundLoans for being the Mac Daddy lender when Angel Oak came out of the gate early on in this business. I'm looking at a Wall Street Journal story on FundLoans, and I remember getting a call from the Wall Street Journal and Tom Hutchins saying, "Hey, do you have any brokers that we should have talked to the Wall Street Journal?" Didn't hesitate. John Maddox, absolutely, because you're not afraid to advertise. And you guys in the mortgage business, it pays to advertise in this business.
Yeah,
it does.
Well, they say marketing is like, if you're not marketing, it's like winking at a girl in a dark room. You know what you're doing, but no one else does. So yeah, you got to tell people about your business.
And what keeps people from marketing?
Fear.
The lie. Yep. It's a lie. Rid your mind of fear and go to the bank.
Yep. You got to do it. That's good advice. We're here to help you. That's what this podcast is about, is to help you find more borrowers, more ways to make money and ideas. And hopefully you're part of the 10% that puts this to use, or 1%. If not, put it to use, because it will work. It's helped us, help my career, help you, I'm sure. And,
contact us. We'll take you by the hand and show you what works.
Yeah, for sure. Well, we appreciate you coming on the show, and thanks for being here. Even though
what do we have here, John?
We're frenemies, right?
We are frenemies. But tell me about what's sitting next to me
tequila.
here.
This beautiful amber wheat colored reposado. You like reposado?
It is 7:30 in the morning, so why not? No.
And we've been up all night doing the podcast. No, it's definitely afternoon for sure. This Amor Indio tequila is lights out.
Wow.
The best reposado you'll ever have.
It is delicious.
And you can buy it at wedrinktequila.com.
wedrinktequila.com. Oh.
Salud. Thanks for watching, everyone. Like I said, please share with your friends. It's how we grow. Let us know who you'd want on this podcast. We'd love to have new guests. And thanks, Ryan, for all you're doing.
Appreciate you,
crushing it. And apply these principles, apply these ideas. You guys will crush it in this industry. 2024 is going to be a good year, yeah?
Or your 10%ers, oh boy, it's going to be really good.
Crushing it, yep. All right, thanks for listening. See you on the next one.
The $1 Million Mortgage Experience Podcast.